So Web is a mission-driven organization. Our business mission is to advance sustainability and create prosperity through positive impact investments. So impact as a concept lies at the very core of our investment process. Our starting point, the way that the framework that we use to identify an investable universe for our fund, is one where we purely look for businesses which are providing, in our definition, a solution to a sustainability challenge. And what we mean by that is that we're looking entirely for businesses which are creating a positive impact. They're businesses which create a positive environmental or social outcome through the product or service that they sell, the way that they generate revenue. So that the way that they grow, as this business grows, it grows in lockstep with a better outcome in terms of an environmental or a social perspective. So we see a positive symbiotic relationship between impact, looking for impact, and achieving positive investment returns. The three pillars of our investment philosophy are that we're looking for companies that are exposed to long-term growth, structural trends, we're looking for high-quality investments, and we want to be disciplined about valuation. If we can get those three things in balance, we think that's a route to making attractive long-term investment returns. Now, we identify growth by having this universe of companies that is companies that are providing what we call solutions to sustainability challenges, or positive impact from an environmental or social perspective in terms of the products they sell. Now that leads us to industries and themes that have structural growth characteristics in a world where we believe growth is increasingly scarce and increasingly hard to come by, because the transition to a sustainable economy is creating risks for many traditional industries whilst it's simultaneously creating opportunities for those industries which are looking to solve those major challenges. In terms of looking for quality, which we believe also is an important factor in investment returns, we believe that businesses which are very well run from a social, environmental and governance perspective are generally businesses that often have very strong management teams that have other evidence of quality, financial quality, low leverage and stable returns, an ability to protect and defend their reputation and brand in the marketplace. These are all factors of quality or examples of quality that we look for in a business to invest in, and they're all evidenced by a process of analysing ESG criteria and factors. So over the last few years, the conversation, the interest in impact investing has moved from a starting point of being largely around philanthropic, charitable investments in private equity arena to now a multi-asset class discussion around how we can have impact and how finance works to impact the wider world across all asset classes. And I think that's a really positive move because it means that we're talking about much greater scale of assets. So one of the things about moving this conversation from impact investing purely relating to philanthropic allocations in private equity to multi-asset class discussions is that we're now potentially leveraging much more capital across a much wider spectrum towards finance with a better purpose, finance to create positive purpose. Now clearly in terms of where you can invest in businesses that have positive impact regardless of the asset class that you're looking at. The core definition of impact investing from the Global Impact Investing Network starts with a starting point of intentionality. So the key thing is, what are you trying to achieve with a portfolio? Are you trying to achieve a positive impact, and how are you trying to achieve that? The secondary thing is measuring and reporting against that. Now that is absolutely something you can do in listed equities. Against that, I would argue that it's important to think about the spectrum of impact, because there is a spectrum of intensity of impact. Now, in some impact-first investments in private equity, I think you can achieve a more intense form of impact compared with secondary market traded listed equities. However, by conjoining across that spectrum, I think overall we can have a greater impact on the wider world through using finance for that more positive purpose. Well, this conversation around impact investing across all markets, not just in Australia, is really, I think, changing the shape of the responsible, sustainable investment world. And this industry has grown up over many, many years, typically with asset owners and the investing part of the chain, or the clients of investment managers, defining the inputs through either ethical criteria, through a push to greater integration of environmental, social and governance analysis, through a push to greater stewardship and better voting or governance. And that's really about trying to control the inputs, and has necessarily, as a result of that, this conversation around how finance could have a more positive purpose, or what the nature of responsible investing is, has slightly operated in a plane that's been somehow divorced from the investment process. Now, we see it as integral to the investment process, and I think impact as a conversation is really helpful, because it allows a fund manager to set out a mission, set out an intention. What are you trying to achieve, both from a risk and return perspective, but also an impact, an environmental and a social perspective with an investment portfolio. And then you can set out a process, and then you can report against it. So it shifts the emphasis from inputs to outputs, because impact is really about what we're achieving. It's about the outputs that we create, the outcomes and the outputs that we create from an investment portfolio. And I think that's a really constructive conversation, and I think it has the potential to really lift this industry into much greater scale, and that's a really positive thing.